Right, good afternoon, everyone. Thank you for joining us on the webinar today. Definitely appreciate your time. It's 12 o'clock now, so we want to get started on time, make sure that we don't take up too much of your day here. We're scheduled to go to about 12:30, so we will definitely make sure we stay on course and leave a little bit of time for questions at the end of this. So really, I think pretty obvious with everything going on right now. There is a lot of questions out there, a lot of concern and worry from a lot of our clients, our members, friends and family of our clients and members. So we just wanted to spend some time here today to hopefully, ease some of those fears that you have, as well as talk about some potential solutions that could help you out in your situation currently. So we've done a lot of webinars or seminars in the past. And in general, we kind of focus on broad strategies that we utilize with our clients. Today, we're going to kind of drill down a little bit further and focus on a very particular solution. So we understand, of course, that everybody is in different positions in their life. So this might not be an exact fit for every person, or it might be something that works as a piece of your overall plan. But we really feel like, this solution is something that can work in some way, shape, or form for everybody, regardless of where they are actually at. So I'm going to jump into things. I'm not going to spend a whole lot of time on our intro because I want to make sure we have adequate time for the real meat of the presentation and for questions at the end. But for anyone who doesn't know, my name is Jeff Beck, and I'm a financial advisor with the Tranel Financial Group. We've been partnered with Great Lakes Credit Union for over 15 years now, working inside the Great Lakes Credit Union Financial Advising Center. Really, today's presentation, like I said, I want to jump right in. It's called Tactical Income Solution. So this is, like I said, really drilling down to a specific solution for people with everything that is going on currently, right? There's a lot of questions, even though we are working remotely and not meeting with people in person, right? We are still conducting a lot of phone meetings, Zoom meetings, go-to meetings, etc. And we're still coming across a lot of questions and, again, a lot of concern with what's happening. So people are saying, of course, we want to make sure our health and our family is taken care of first and foremost. But with everything happening with the markets and the economy, right, people are also concerned about their money at this time. That's what is going to allow you to take care of your family, right, and continue to live your lifestyle as you move forward. So we're going to jump right into this in as much detail as we can with the time we have allowed. And like I said, I'll leave questions or some time for questions at the end. So what we're going to do is we're going to talk about, what we do and some of the questions that we're getting with our clients, the global growth story, how dividends are not all created equal, and we're going to tie that into what the tactical income solution actually is. So what we do, right? I mentioned at the beginning that everybody might be in a different position who's on this webinar today. So regardless of where you're at, this is something that can still supplement what you're doing, right? If you're working and accumulating money, we can help with that, doing it more efficiently, right? If you're in retirement, we can help you produce greater income and income that is much more protected or insulated from market volatility. And if you're well into retirement and starting to think about the next step, right, we can help with transferring money to loved ones, right, leaving that legacy behind. So regardless of where you fall under, right, this is something that can still be a big help to you. I mentioned we're having a lot of these conversations still. These questions, right, are questions we always get regardless of what's happening, and we've been getting them for years. But right now, I feel even more so than ever, right, we are really getting these questions a ton. Will I run out of money? If you're invested in the market already, right, and you're seeing your money fluctuate, right, that's a huge concern for people. If you're in retirement and taking money out, right, am I going to start to deplete my account if we see all this fluctuation and volatility continue? And then on the other side, right, am I maximizing my potential? If you are utilizing a lot of our bank instruments, right, you probably have seen over the past few years, and again, more so even now, with interest rates basically at zero, right, we're not really capitalizing on anything. With an inflow of this cash we'll be seeing, into the markets, right, inflation will probably continue to spike. And therefore, if we're making 0.5% on our money and inflation is going at 2-3% a year, that's going to put us in a very tough spot down the road. So we need to find ways to maximize our potential. And lastly, right, talk about being very worried about your finances. We can't enjoy the rest of our life, or we can't take care of the other important things going on in our life. Right? I said right now, family and health are just top of mind for everybody. If our finances are really putting a lot of concern in our heads and taking up much of our mental capacity, it's hard to focus on those other things. So a solution like this, and working with a good advisor and team of analysts to help kind of take that worry and concern out of it so you can focus on those other things, can be really huge for you. So we'll talk about this global growth story first, right? When I show a picture like this, and we're in a room doing a seminar, right, and I say, if you saw this picture and you could invest in whatever this is, would you want to do that? Most people look at it, see the chart moving up, and say, I would love to invest in that, right? That would be great. This is a chart of the U.S. population going back to 1790, and obviously showing some projected growth into the future as well, right, by millions of people that we have. So since we've started keeping track of population, right, it has gone up every single year. There are more people being born than are passing away year after year after year. So what does that mean exactly? Well, we can't directly buy population growth, but there are ways to be creative and invest in the fact that we know that will continue to grow. So you think about a company like McDonald's, right? According to their website, 27 million Americans eat there every day, right? That might just be a cup of coffee, maybe it's a Big Mac, but just going there in general, purchasing something every day. 48 million customers worldwide. So I think we could all agree, right, is there are more people on planet Earth, and obviously based on that data, more people in the US specifically, right, the more people that will utilize and go to McDonald's. I think today, obviously, like I said, most of us are still at home. A few of us might be, out and about working as essential employees. If you drive by McDonald's right now, or maybe you've been going yourself, right, there are still lines through the drive-through, right, even with everything going on. So it might not be your particular favorite restaurant, but in general, the more people that are in the world, and again, specifically the US, right, the more people that will consume McDonald's. So that's a huge piece to this solution, right? This portfolio we're talking about, tactical income solution. That first part is key. That demand for these products is fueled by population growth. More people on Earth, more people that will use these products. The second key ingredient to this is that the companies pay a strong and consistent dividend. Right. So the big thing to focus on as we talk about this is that all dividends are not necessarily created equal. So we'll start from the very beginning, right? If you're not familiar with what a dividend actually is, it's when some of these publicly traded companies share a portion of their profits with individual investors like ourselves, right? So these are generally going to be very stable companies that have very strong revenue numbers and are able to share those profits with shareholders like ourselves. So you think of a company like Johnson & Johnson, all right, this slide and this data is from 2014, and that's by design to be a bit outdated, right? At that point, they were trading at $105 a share, and the dividend was $2.80 per share, right? You fast forward to today, they're trading at $128 a share, and their dividend is up to $3.80 per share, right, over that 6-year span now. So Johnson & Johnson is fairly unique in the fact that they are a dividend aristocrat. So that's a real term. You can go ahead and Google that in there, and you'll get a lot of this similar information, right? It's a group of S&P 500 stocks that have increased their dividend payout for at least 25 consecutive years. increased it every single year for at least 25 years. So it doesn't mean that they just kept it the same. They had to increase it for 25 years, which is extremely impressive, right? It's a very prestigious list to get onto the dividend aristocrats. And Johnson & Johnson is a company that follows suit, right? This is just a little chart, again, going up to 2014 and going back to 1997, right? Just showing that steady increase in dividends over time, right? It's very, very impressive. Another company you can think of is someone like AT&T, right? Again, when this slide was originally created, share price $34, annual dividend $1.88, right? Which represent about a 5.5% dividend yield. Today, AT&T is paying a dividend yield of $2.08, right? So not quite maybe the same growth as Johnson & Johnson has done, but still continuing to increase their dividend year after year after year, right? You can see the AT&T's chart going back all the way to 1985 and continuing to increase their dividend every single year. Very impressive. And that's what we focus on. We say dividends are not all created equal. There are companies that pay great dividends one year, and maybe the next year they cut the dividend completely. So to be a part of that dividend aristocrat list and to have that longevity, that consistency of increasing your dividend is something very special and very impressive that we focus on when putting together this solution. So we talked about, right, demand is fueled by population growth. That's a key factor. Paying a strong and consistent dividend, right? Think of that dividend aristocrat term. And the last piece of it is to say, regardless the state of the economy, people still buy what? Still need to utilize what? This could not be, again, more true than it is with the current environment that we're in. So this slide works out really nicely right now. You look at these companies and you say, maybe some great companies, maybe a lot of companies that we all personally have utilized or do utilize on a regular basis. And you say next to each one of them is their dividend yield. So very comfortable, solid dividend, between 1.5% up to 5%, right? Very good, strong dividend that these companies pay. Well, Ford just came out the other day and said they were going to cut their dividend, right? So when we look at it, we say these companies do not fit what we're talking about because they are cyclical companies and they don't answer that question regardless of the economy. People still buy what, right? I'll remove that big red slash through there, right? You look at all those companies, in general, good companies, but people are not going to Disney World right now, right? Shut down. People are not flying in planes nearly like they would, right? Maybe some essential travel that has to be done. Other than that, most people are not traveling. We're not out there purchasing cars right now or remodeling our homes, buying new appliances, right? All that stuff is put on hold given the current state of the economy and the situation that we're in. That's the issue with cyclical companies. So we focus on non-cyclical companies, right? Represents those items and services that we can't put off buying, right? The needs, the necessities that we have to have no matter what we're experiencing. So in general, we think of that as utilities and consumer staples, right? Those are kind of the two main sectors we think of when we think of non-cyclical. Well, we've added to that. We've kind of coined a term that we call recession resistant, and we've added a couple sectors to that. So including the consumer staples and utilities, we've also added energy, pharmaceuticals, telecommunication, and consumer food, right? So between those 6 sectors, we feel very comfortable in saying, regardless of what's happening in the economy, people still need to utilize the products from those specific sectors. The biggest concern we see, or biggest criticism, when we talk about non-cyclical companies and or sectors, is that they underperform when the markets are very strong, right? Again, great example, we can just look at last year. The market's up 25, 30%. Some of these companies and or sectors, maybe they were up 15%, maybe 20% on the high end. So they do underperform, but we say that they still perform, right? To still see 15, 20% growth is still a fantastic year. And when we have times like we're currently seeing, where the markets are not cooperating, right, they do a much, much better job of weathering the storm. So we tie this all together to create the tactical income solution, right? Regardless of what's going on, people buy what? More population on Earth, more population in the US fuels demand, and they pay a strong and consistent being the key word, dividend. So here's a little snapshot of a few of the companies that are a part of this portfolio or a part of this solution. So it's not every one, and I won't go through the details of every single company, but there are 26 individual equity positions that are a part of this portfolio. And like I said, we'll just go through a few that I feel like really hit home given the current state that we're in right now. So you look at like a Procter & Gamble, right? We probably have all either done it ourselves, going to the store, loading up on all these products, this food products for the house, right? Not knowing when we'll be able to get out again or how easy it'll be to purchase items, right? We're seeing on social media, just stores with nothing on the shelves, right? You think about a company like Procter & Gamble during this time, people are buying their diapers and their Pampers for their kids. We've all seen everything going on with the toilet paper, right? Everybody is purchasing toilet paper at a time like this. No matter whether you're leaving your house or you're staying inside, right? We're continuing to brush our teeth and, wash our hair and do all of those things. So a great, great company pays a strong dividend, and their products are needed, right, at all times, regardless of what's happening in the economy. 3M is another great example. I just like to highlight this one, like I said, right now, right? If you're following some of the news and everything that's going on, and hopefully you're not watching too much because a lot of it is very negative right now, right? The president's on TV talking about how he's in contact with 3M directly to produce those N95 masks in bulk, right? To be sending those out to the hospitals and the healthcare professionals that are out there. We know there's been a shortage, and they are starting to mass produce those to make sure we have them available because we don't know where this virus will go or how long it will last, right? 3M obviously has many products that we continue to use on a regular basis, but like I said, just kind of want to highlight that one that is very important at the current time. Waste Management is one of my favorite companies, a part of the portfolio, right? You think about those three key factors we talked about, right? The more people on planet Earth, the more garbage there will be, right? We're all going to continue to consume products, which creates garbage, right? Regardless of what's happening, again, we're in a situation that kind of unlike any we've seen before, right? Similar to some other events in the past. But when you look out your window, I know over here where I'm at every Friday morning, Waste Management is still outside the window picking up the garbage, right? Regardless of everything that's happening, they are still continuing to pick up that garbage that we continue to produce, right? And they pay a very strong and consistent dividend. It's just an excellent business plan that they have in place that, again, we just feel very comfortable. Anything happening, they will continue to weather that storm very well. We look at Kraft right now. Obviously, Mondelez is taking over the global snack and food brands that are Kraft food. This was a while back in 2012, but I still keep this slide in there, right? I think people can relate to Kraft, and you see a lot of those companies inside of it, right? Going back to the same thing, people going to the stores, buying a ton of items in bulk right now, right? I don't even realize all the time all these different brands that are a part of Mondelez, right? You look at some of the stuff on there, your frozen pizzas, Jack's and DiGiorno's, your cookies, Chips Ahoy, Oreo, right? Oscar Mayer, ton of huge name brand foods that we have in the stores, right? All fall under that Mondelez name, right? So just a great business model, having that many different companies all producing different types of consumer foods. And like I said, in a time like now, people are just buying everything in bulk because we don't know how long this will go, right, or what this will turn into. So another great company with a great business plan. I put Coca-Cola in here, right, just because I think as time goes on, right, we look at some of these companies and start to think, will they always be this good? Will things change, right? For a while, things have been kind of progressing towards eating a bit healthier, right? Trying to do, more of the organic foods. A lot of vegetarians and vegan diets are coming up now. So people will question, right? Is a company like Coca-Cola selling pop or soda, right, going to continue to have a strong foothold, in consumer foods? And we share this slide, right, as you look down there, top row is your sodas, your Cokes, but below that, you can see all the waters and all the juices that they also own, right, that are under that Coca-Cola name. When you look at that, right, we've seen the same thing, people just buying bottled water off the shelves, stocking up on that kind of stuff, right? So whether it's going healthy, right, they are well positioned to do that, whether they continue to sell more in Coca-Cola and pop, right, they're well positioned to do that. In all honesty, right, you think about going to a concession stand, when the kids are playing sports or whatever it might be, it usually costs $1, maybe $2 for a can of Coke, a soda, but those waters sometimes are $3, $4, $5 to get a bottled water. So in reality, they're so well positioned to take advantage of whichever way, right, people start to gravitate towards, right? They'd be perfectly happy with people purchasing more of the juices and the waters and the healthy items. Those tend to cost more as it is. So Coca-Cola, another great company, very well positioned as we move forward. We look at companies like Eli Lilly, Bristol Myers Squibb, right, our pharmaceutical sector. So we think about your prescription drugs that you're taking right now. You might not really be able to leave the house for the most part. The pharmacies are still open, right? If you have drugs or prescriptions that you are taking currently, and they're pretty much a necessity, right, to continue to stay healthy, for some people to continue to survive, that is an absolute necessity that people are going to continue to utilize no matter how long this virus pushes things out, no matter what kind of recession we might be in. Telecommunications, I think, is another great sector that we focus on in there, right? AT&T and Verizon, both companies that are a part of Tactical Income Solution, right? Really the two leading providers when it comes to that. You think about everybody sitting at home these days, right? And a lot of us, of course, are still continuing to work remotely, but your cell phone is one of the biggest pieces of what you're doing. Whether it's working, I know for us, we had some people grab the landlines from the office, bring them home, but really our cell phones are a huge use to communicate internally with our team, for clients to be able to call through, right? If you're just kind of have some time off, people are on their phones playing games, looking at social media, doing all that stuff, right? I don't know anybody who has not paid their cell phone bill given everything that's going on, right? It's just one of those necessities now that we have. It's the world we live in, and these two companies are really the top-notch providers when it comes to that. So when we think about Tactical Income Solution, right, I just ran through some of the companies that are a part of it. I'm not going to share every single company in there and give you a detailed description of each, but the overall portfolio is split up 65% into equities and 35% into bonds and cash, right? So those 65% in equities, that's either a 2% or a 3% sliver for each one of those companies that we just talked about, falling in one of those 6 sectors and paying that very strong and consistent dividend yield. So if you haven't heard of Morningstar, they're a big third-party information aggregator, basically. And I'm going to share with you just kind of a snapshot of the portfolio. It's very small, a little blurry. It's not meant for you to read in detail. But I just share with you a couple highlights from it, as people will want to know this information. And as we finish this webinar, right, if you have additional questions that you want to go through, right, we would talk about this in much more detail. But right now, this portfolio as a whole has an average of about 3.8% dividend yield. And over the last 10 years has averaged basically just below 10% per year, right? So again, for a lot of people right now, you're kind of wondering, what does all this mean? How does it actually perform? Those are just some numbers for you. Like I said, just to kind of give you a general idea. It's not meant for you to go through all those details currently, but again, if we have a continued conversation after this, it's something we would go through in much, much more detail. But again, just kind of wanted to share those quick, important points about the portfolio and the performance of it. So just kind of think when you're focusing on this solution, right? It's a strategy that's suitable for an investor seeking a balanced investment approach and willing to really just accept a reasonable return over a reasonable period of time. That dividend, that consistent and strong dividend, will help continue to see that reasonable return regardless of everything that is going on in the economy. So the next steps, right? A lot of people, like I said, we try and just be proactive about answering some of the questions that usually will come in after we share these webinars. The next steps is really how could I set this up, right? How could I implement a strategy like this moving forward? So first and foremost, we would have to establish a new account, right? That new account can be any type of registration you can think of. It can be IRA money, right? Retirement qualified money. It can be a joint account. It can be a trust, right? Any type of registration doesn't matter. We basically just open up that new account. Once that account is opened up, then we fund the account. Right, so I mentioned there are some people out there listening probably who have a bulk of their money in cash. It's just sitting there and not earning very much interest, and we're looking for ways to maximize our opportunity, but still do it in a very safe and smart way. We can fund it with a check. We can link it up to a checking or savings account and fund the account via ACH, right? Many different ways we can do that. There might be some people out there who are invested in the markets right now and just struggling with all the volatility that's going on, right? Seeing big swings up and down, looking for something more secure, more stable, right? We can do a transfer from any account that you have, right? And do it in kind. Whatever you're currently holding, we just move it over in kind, get it into the new account, right? So a check, or again, move it in kind, get it into the new account. If we have to sell the shares of what you were invested in, we do that, create the necessary cash, and then we allocate into the portfolio, right, that we just talked about, the tactical income solution, diversified across those 26 different companies and 3 bond funds in there, and we're all set and ready to go. So again, this puts us basically right at time, just before 12:30 here. So just want to reiterate for you, right, a great solution with everything going on. If you're looking for some safety, some security, right, but still want to maximize your potential, even as all of this is happening, it's a great solution, right? Regardless the state of the economy, people are still buying what? These companies pay a very strong and consistent dividend, right? And their demand is fueled by population growth. That is the main focus of what we have here and how we can help our members and our clients through a difficult time like what we're going through. So with all that being said, I just want to thank everyone again for your time today, jumping on the webinar. Definitely hope that everyone is staying safe and healthy out there. I know, like I said, we're right to 12:30 now, but we'll stay on for a little bit if anyone has any questions at this time. Thank you again.